Good Monday morning and welcome to Market Day Report. I'm Chris Swift. Not a great deal happened overnight, but we did see the beans get up a little bit overnight. They did trade back lower as we went into the morning session, but I saw that November contract up right at about 11.97 3/4. We made 11.99 3/4 last week. Let's take a look and see how we're going to start off this morning. Now, we've got the corn market up 3/4 on the May contract at 437.5. That's a half off the low of the day. We've been as high as 440.5. The July up 1 1/4 at 450 1/4, and December a 471.5 up 3/4. Take a look at our soybeans, and they've been just a little bit softer, not too awful bad. May down 3 at 11.95 1/4, and again been back above 12 in the overnight session. The July contract at 12.09 3/4, down 2 3/4. November new crop 11.86 1/4, down 4.5, and we can see that 11.97.5 high hanging up there. Let's see what wheat's doing. Wheat's a little bit firmer this morning. I got the May up 8 1/4 at 536 3/4. The July up 7.5 at 551.5. Kansas City hard red winter wheat. That's a little bit firmer, up 4.5 on the May at 570 3/4. July up 4 1/4, 564 even. That's another one of our new crops. Minneapolis spring wheat, it's a little bit firmer as well, up 4.5 on the May at 651 even. July up 3 3/4 at 457 1/4. Take a look at our crude oil market. It was higher when I came in this morning, and it still is, because that's one of the markets that's really moving and having an impact on everything out there for the time being until we can get that started back down again. But again, note that it's in a clearly inverted carry charge there. So let's bring our next guest in, Brian Hoops. He's with Midwest Market Solutions. And Brian, good morning to you, and I'm ready to hear what you got to tell us on this fine Monday morning, sir.
Hey, good morning, Chris. Hope you had a great weekend. There isn't a lot of news this morning. There was no private export sales and no cancellations this morning. We did see a private sale of corn on Friday to an unknown destination, which I alluded to could end up being China. And I thought that would be more supportive than not for the corn market, just from the standpoint it wasn't Mexico, it wasn't a routine sale. It's probably going to end up looking like China is buying some U.S. corn. So that was a supportive feature. Now you have weather in northern Brazil turning fairly wet through the end of the month, and that includes the corn areas that are being seeded. About 95% of the crop of the safrinha corn crop has been planted, so that's going to be very beneficial for that crop. But here in the U.S., there's private forecasters talking about the end of March here being much colder than normal, and even another blast of snow into the northern plains into early April. So that could and probably will delay a lot of talk about field work and field prep and planting corn real early, or even soybeans early. We know there's a lot of people that have been out in the fields doing some field work already, and hydrous applications, field prep, wanting to plant, and that will probably slow things down considerably, and also could be a little supportive for corn and soybean values. So I don't know if there's a lot of fresh, real news coming out at the markets, except weather-wise and how the market wants to interpret the rains in Brazil versus the cold and maybe snowy conditions here in the U.S.
Absolutely. Right. I noticed I read over the weekend I had seen some of the February imports from China. And I noticed that corn was down, and I want to say it's probably 31, 33%, somewhere around there year over year. Several other commodities have been lower, some of them a little bit higher. I'll go through that a little bit later on. But in that corn market, they've been absent from the U.S. corn market for a while. They have a small reliance on South America, but I kind of get the feeling with corn at these low prices here that we might start seeing some actual buying here of it, even if it's not way out into the future, but right up front here. Basis hadn't changed much. Is there something out there that you see in this corn market that might be advantageous to be owning it right here?
If you're a producer, certainly if you were kind of forced into making some basis type sales, a lot of people had those contracts at the 1st of March and were forced to make some cash sales. I think you do need to look at reownership opportunities in here. We've been talking about kind of changing this narrative from selling rallies in February to as we turn into March and go past deliveries, absorbing those deliveries, and then talking about weather and these issues. So always weather is going to be on the forefront of traders' minds. It's probably 95% of what we trade on during this growing season. And, there's even forecasts, if you can believe, going out into the summer months that are going to be much hotter and drier than normal. And just the standpoint that you have very low subsoil moisture across a big portion of the Midwest, combined with possibility that we could see hot and dry extended weather models into the summer, I think you'd have to have some long-range call options. Go out into September. July probably doesn't give you enough time, but you have to go at least into September, buy some calls or some call spreads or do some sort of a strategy there and retain ownership through the spring and the summer growing seasons.
All right, Brian, stick with us. We're going to go away, take a real quick commercial break. We're talking with Brian Hoops on Market Day Report. Stay with us. Risk is inherent in commodity production. It can't be eliminated, but can be managed. With over 30 years of experience, Swift Trading Company has the knowledge and provides the service to meet producers' needs. For more information, visit swifttradingco.com. Well, the livestock markets were kind of mixed last week. We did end on a little bit of a positive note and had some pretty good cash trading that went on too. I got a pretty good information dump this weekend. Let's start off with the live cattle market. This is where we closed out on Friday, where we'll start out on this morning. The April contract up 30 at 187.25. The June up 22 at 183.60, out to the Dees at 189.62, up 37. The feeder cattle market had been a little bit firmer too. The March contract 249.27, up 180, and that is right in line with the feeder cattle index at 249. April up 95 at 252.12, out to SEP at 268.37, up 60. Look at our hog market this morning, and it was firmer as we went out on the close on Friday. April up $1.90 at 86.92. The June contract up 105 at 102.47. July up $1 at 104.50. We invite my guest Brian Hoops back in again. Brian, we've seen a lot of things, and I'll tell you, it's getting springtime fast here because I have seen the wheat fields. They have really started to come up. I mean, they put a few inches on just since last week when I saw them last.
The wheat fields look amazing. You know, you get into Oklahoma, Kansas, here in Missouri, it's just a fabulous looking crop so far. Now it'll probably slow down with the cooler temperatures that we're going to see across the Midwest, but the Southern Plains, when we talk cooler, we're getting into the the 60s instead of the 70s. So it's still going to look good, still going to grow. Some rain, of course, would be nice, but I've had a client tell me he kind of went and toured Oklahoma, Kansas, a lot of the wheat fields, a lot of the wheat country. He said it's not a good crop; it's a tremendous looking crop right now.
Well, and I know we talked to Dr. Darrell Pill last week, and we discussed about how many cattle are still out on that wheat pasture. I'm kind of betwixt and between, thinking that, yes, it's a great wheat crop, but if we keep more and more cattle on it, and we know we're a little bit lower on production, we might actually try to find a bottom in wheat somewhere here soon, shouldn't we?
Well, let's hope so. It's taken a beating on the charts. It's starting to find some technical support, and the fact that corn and soybeans have bottomed and tried to rally, I think is starting to spill over to the wheat. It might be the last one to try and find that bottom. We were just talking about contract lows last week in Chicago after China canceled some purchases. So hopefully we are getting close anyway. But if you get some sort of a frost or something, if it gets really cold during this time of the year, even another week or two, that would really be friendly for that wheat crop. Absolutely.
And I remember last week you had mentioned that the weights were up about 5 pounds week over week, and they were 20 pounds year over year. So I appreciate you bringing us that information last week. I did confirm that. I certainly do appreciate you being with us this morning, Brian. Hope you have a great trading week. And as Brian Hoops, he is with Midwest Market Solutions. And Suzanne, good morning to you.
Good morning to you, Chris. Always a pleasure. How are you doing this morning?
It's a fine day out there. It truly
Expecting
is.
Some big things when these markets open?
Probably not too awful much, just right off the bat.
Ramp,
but towards the end of the week, we start getting some more information out there.
Going to look forward to it. Thank you so much, Chris.